The International Monetary Fund has excluded Nigeria from its list of Africa's fastest growing economies, despite an improved growth projection in its latest regional economic outlook. According to the report, Benin, Côte d'Ivoire, Ethiopia, Rwanda, and Uganda are leading the continent's growth, driven by fiscal discipline, infrastructure investments, and stable macroeconomic policies. Nigeria's economy is projected to grow by 3.9% in 2025, supported by higher oil production and stronger investor confidence, but still trails behind regional leaders. The IMF warns that Nigeria must deepen structural reforms, boost electricity generation, and diversify its revenue base to achieve sustainable growth.
Hello viewers, you are welcome to this great channel where breaking stories are brought to your doorsteps. Like and comment on news stories that spark your interest and curiosity. Subscribe and hit the notification bell so that you will be the first to be notified as breaking stories are published on this channel daily. My good people, I know the story I am about to share with you will shock you, because you and I know that over the years, our leaders continue to make us believe that Nigeria is the giant of Africa. But the International Monetary Fund has revealed that Nigeria is not among Africa's fastest growing economies. Smaller countries like Benin Republic, Côte d'Ivoire, Ethiopia, Rwanda, and Uganda continue to lead the continent's growth trajectory in the world.
The IMF said the 5 countries are now among the world's fastest expanding economies. The growth is driven by sustained policy reforms, improved fiscal management, and investments in infrastructure and manufacturing. Despite its large population, abundant natural resources, and recent reforms, Nigeria is not among Africa's 5 fastest-growing economies. According to the International Monetary Fund, IMF, there are several key factors that explain our situation as a nation. Before I continue with the analysis of these factors, you should like, comment, and subscribe to this channel to help it grow and to continue to bring you stories that will keep you enlightened. Now let me explain the factors that are setting us backward economically. 1. Nigeria's economy remains heavily dependent on crude oil exports, which makes it highly vulnerable to global oil price fluctuations. When oil prices fall, government revenue, foreign exchange earnings, and growth are all negatively affected. In contrast, countries like Rwanda and Ethiopia have diversified their economies through manufacturing, agriculture, and services. 2. Poor electricity supply, bad roads, and inefficient transport systems continue to hinder industrial productivity and discourage foreign investment. The IMF has repeatedly urged Nigeria to improve power generation and infrastructure to support growth in manufacturing and services. 3. Although inflation has eased slightly, it remains high, reducing consumer purchasing power and discouraging investment. The weakening of the naira has also raised production costs for businesses that rely on imports, limiting competitiveness compared to other African economies. Before I continue with the rest of these factors, you should like, comment, and subscribe to this channel to help it grow and to continue to bring you stories that will keep you enlightened.
4. Nigeria's rising public debt and increasing reliance on domestic borrowing pose financial risks. The IMF noted that about half of public debt is now held by local banks, creating a sovereign bank nexus that threatens financial stability and limits funds available for private sector lending. 5. While some fiscal and monetary reforms are in progress, their implementation has been slow and uneven. Challenges such as corruption, policy inconsistency, and bureaucratic inefficiency continue to undermine investor confidence and economic expansion. 6. Nigeria's tax-to-GDP ratio remains one of the lowest in Africa. Weak tax collection, widespread evasion, and inefficient expenditure management have constrained public investments in key growth sectors like education, health, and technology. Before I proceed to what Nigeria can do to catch up with and even surpass these 5 countries, you should like, comment, and subscribe to this channel to help it grow, and to continue to bring you stories that will keep you enlightened. Now, let me share with you what the government and you and I need to do to join Africa's leading economies. 1. Nigeria must diversify its economy and reduce its dependence on oil. This suggests that Nigeria should expand its investment in agriculture, technology, manufacturing, and renewable energy. The government needs to ensure that farmers have access to cheaper and affordable farm inputs through subsidies, loan facilities, professional support, and markets. Promoting value-added exports and intra-African trade under the African Continental Free Trade Area can also boost growth. 2. Electricity generation should be expanded, transport networks should be upgraded, and ports should be modernized to help lower production costs and attract industries. This will help local manufacturers compete regionally and globally. Before I proceed with the rest of what we can do to catch up with the first 5 countries, you should like, comment, and subscribe to this channel to help it grow and to continue to bring you stories that will keep you enlightened. 3. The government should sustain monetary tightening to control inflation while maintaining a stable, market-driven exchange rate. Fiscal policies must focus on reducing waste, improving budget transparency, and increasing capital expenditure in productive sectors. 4. The IMF recommends modernizing the tax system through digitalization, enforcing compliance, and cutting inefficient tax exemptions. Building public trust in tax administration is also critical to improving revenue generation. Before I proceed with the rest of what we can do to catch up with the first 5 countries, you should like, comment, and subscribe to this channel to help it grow and to continue to bring you stories that will keep you enlightened.
5. Nigeria must continue to strengthen institutions, ensure transparency in public spending, and block leakages from illicit financial flows, such as tax evasion and capital flight. This will improve investor confidence and encourage sustainable growth. 6. The government should provide quality education, vocational training, and healthcare to empower the nation's large youth population to become productive contributors to the economy. A skilled workforce will attract investment in technology and industry. 7. Federal, state, and local governments should support small and medium enterprises, SMEs. SMEs are vital for job creation and innovation. The government should expand access to affordable credit, simplify business registration, and provide technical support to boost entrepreneurship. This point needs collaborations between governments and the citizens. Traders who collect loans from governments must be accountable. That is, they must repay their loans to enable the government to continue to expand her support to SMEs. Before I end this news story, you should like, comment, and subscribe to this channel because I want you to always be the first to be notified when we publish news stories on this channel. Nigeria's exclusion from Africa's top 5 fastest-growing economies reflects structural weaknesses, policy inconsistency, and over-reliance on oil. However, with consistent reforms in fiscal management, infrastructure, governance, and economic diversification, Nigeria can unlock its full potential. By strengthening non-oil sectors, improving power supply, mobilizing domestic revenue, and investing in its people, Nigeria can rise to become one of Africa's leading and most resilient economies. Please drop your opinion regarding this issue in the comment section, like, subscribe, and hit the notification bell so that you will always be the first to be notified when we publish news on this channel.